In this video, I want to talk about the smart place to stash your cash. Everyone should have some cash savings on hand for emergencies and short-term financial goals. And the smartest place to store that money is in a high-yield savings account. Hey guys, my name is Chris Jamar and welcome back to my YouTube channel. On this channel, I inform and empower you about financial wellness. I also break down the news stories you need to know about the economy, your money, and your career. If this is your first time watching any of my videos, make sure you hit the subscribe button below, and if you're returning, welcome back. I honestly hope you find this video useful enough to share with someone. In this video, I want to talk about the smart place to stash your cash. Everyone should have some cash savings on hand for emergencies and short-term financial goals. And the smartest place to store that money is in a high-yield savings account. With a high-yield savings account, you can expect to earn a higher interest rate when compared to traditional savings account, and that allows your money to work harder for you. Many are offered by online banks to promote a high annual percentage yield, which represents how much money you will earn in interest over the course of a year. A high-yield savings account works well for risk-averse investors, and especially for those who don't need money in the short term and want to avoid risk that they won't get their money back. Here are some of the pros and cons of opening a high-yield savings account. 1. It is a safe interest earning account. Like traditional savings account, a high-yield savings account pays interest. That means your deposited funds will earn money for sitting in the account. Savings account also allow you to benefit from compound interest. In other words, you earn interest on your interest. Interest rates can vary widely from bank to bank. At the end of March, the average rate on a traditional savings account is just 0.37%, according to the Federal Deposit Insurance Corporation. Meanwhile, high-yield savings account has rates as high as 4.75%. That's 12 times national average that I just mentioned. And being a deposit account, it's insured by the FDIC up to $250,000. Second pro, your investment risk is low. Individual stocks, cryptocurrency, private equity, and hedge funds all carry investment risk. These markets can swing widely, leading to significant returns or steep losses. High-yield savings accounts, on the other hand, are considered much safer investments. Returns are more modest, but account holders can rest easy knowing that their cash reserves aren't at the mercy of market volatility. FDIC insurance provides additional protection, like I just mentioned. Savings accounts tend to offer variable interest rates, meaning they can change at any time. The Federal Reserve sets to influence the cost of borrowing money. Savings account yield usually mirrors the fund's rate. When it increases, savings accounts usually follow suit, and vice versa. Another pro, liquidity is not an issue. So some investments don't provide easy access to your funds. A certificate of deposit is a great example. This type of account rewards you for leaving money in your account for a set amount of time. At the time of this writing, CD rates were as high as 5%. But there's a catch. You will likely be penalized if you pull the money out of the account before the maturity period. The penalty will depend on the term of the CD, but it's usually based on the account's interest. Similarly, retirement funds like a 401k or a traditional IRA can be great when you want to grow your funds, but they're not known for their liquidity. Both charge a 10% early withdrawal penalty if you tap into those accounts before you're 59.5. And whatever you withdraw, you're going to be taxed on as income that year. With a high-yield savings account, you can expect relatively easy access to your money. Some financial institutions may limit how many free transfers and withdrawals you have in a given month, but liquidity generally is not an issue. So again, this makes a high-yield savings account a great place to store something like your emergency fund. While there are a lot of upsides to putting money into a high-yield savings account, there are quite a few downsides to keep in mind as well. I'm going to mention those right now. 1. Transfers and withdrawals, they actually may be limited. As I just hinted at, some banks may limit how many convenient transfers and withdrawals you can make in a given month. Kind of crazy, right? That includes electronic transfers. The Federal Reserve once required banks to limit consumers to just 6 transfers or withdrawals per month, and that rule has since passed since 2020. However, some financial institutions may not continue to hold it or charge fees if there are too many electronic transfers. This isn't necessarily a bad thing, but it's more so to discourage you from dipping into savings that are for non-emergencies, which obviously makes sense. Another con, you could be missing out on high return investments. Generally, a savings account is not known as a high return investment. If you're looking to grow your wealth in the long term, holding too much in savings or too much in cash can actually work against you. Inflation may even be higher than the yield you earn over time, and even the highest APYs lag behind the average annual stock market returns, which have historically been around 10%. Underinvesting could mean you're missing on the potential growth. That's not to say that investing in the stock market is a sure thing, but sprinkling some high-risk investments from time to time into your portfolio will help you stay diversified. The idea is to have a healthy mix of investments across a range of asset classes. I've talked about diversification in this video above. Another con, some financial institutions, they charge fees. Most high-yield savings accounts charge a monthly fee or they impose a minimum balance requirement, but that isn't a hard and fast rule for every institution. Every bank or credit union is a little bit different, but you should familiarize yourself with the fee structures as they can really vary. We'll also want to look out for penalties for overdrafts and return deposits that they may charge for making many monthly withdrawals as well. So again, stay on alert. The bottom line though, a high yield account is an essential financial product if you're looking to build an emergency fund in the near future or saving up for something big that's coming up, like maybe a financial vacation, a home renovation, or some type of project. You can maximize the return of your money more so than going to a brick and mortar bank account. Your cash is safe and you can have access to it if you need to. So guys, we've come to the end of this video. If anything stuck out to you, or you know anyone that's looking to generate some interest in the short term, if you're looking to do the same, please like, comment, tell me what stood out to you, and share this video with someone you know. See you next time.